everybody, and welcome to a new series that I've decided to start called What Does the Required Want From Me Anyway? This might sound similar to a comedy TV series that was aired many, many years ago called Whose Line Is It Anyway? So I thought I'd make a little spin of that and say, what does the required want from me anyway? So the inspiration behind this is mainly because over the last couple of years, I've been in this tutoring game, and for the last 9 months, I've been a lecturer, so I've been exposed to a lot of marking, and I often see that where people go wrong, it's not necessarily that they don't have the technical knowledge because they're picking up the triggers, but they're either writing things that are out of scope or they are misinterpreting what the required wants from them. So they give things that are either too much or too little, or they don't know how to word things, which is the common culprit from an auditing perspective. Okay, so we are going to kick it off with the Auditing Edition, since that is one of my faves. The first one that we're going to take a look at is ethical concerns. So when you see an ethical concerns required, I know we just want to jump in and we want to start writing, but we have to just take a couple of seconds to dissect it. And I'm going to show you why that's important. So when you see ethical concerns, there are a couple of things that you need to think about. Okay, because ethical concerns, that is the required that you want. It's the one you want because it's so broad reaching. Because remember that in our space, anything that is illegal from a business perspective is also unethical. Okay, so on that note, when we see ethical concerns, we can talk about corporate governance, you know, your King and your Companies Act. Okay, so that's one thing we can speak about. We can then speak about the CPC. Obviously, if you are a CASA or a CASA in training, I see a lot of people making a mistake with the CPC. They try to apply it to someone who isn't a CA or a CA in training. Okay, we can then use our ethical frameworks, our good for self and others. We can look at the APA. We can look at ISQM1 and ISA 220. We can look at any other legislation that may have been breached. Because remember, in our space, in the business space, anything that is illegal is also unethical. So ethical concerns type of questions are where you should really be banking a lot of marks, right? Okay, so ethical concerns, broad reaching. We can talk about a lot of things, but we need to keep in mind this very important thing called perspective. Okay, so whose perspective are we assessing the ethical concerns from? Okay, from a corporate governance perspective, that is typically the entity management, right? The CPC, we've already spoken that it is a CASA. Okay, good for self and others can apply to anyone, any employee, no matter whether they're a CA, no matter whether they are part of management. Okay, so this can be for anyone. The APA and ISQM1, we know that this is specific to the auditor. Okay, so now we know what ethical concerns entails. And when we look at these two requireds, at first glance, they seem pretty similar. Okay, so we see discuss ethical concerns and with reference to ethical considerations. And now people might want to just jump straight in and start regurgitating what they know about ethical concerns or ethical considerations, right? They might want to just jump straight into this. But this is where you guys go wrong, because exam requireds tend to do this nasty thing called scoping. So this is where they limit what you can talk about. So if we look at the first required, it says exclude Companies Act and King. So immediately we cannot go and talk about this aspect at all. No corporate governance, so no King and no Companies Act. Okay. Then we see, okay, cool. So we've said exclude Companies Act and King, so no corporate governance, and exclude any threats to fundamental principles. Not exclude fundamental principles, but exclude threats to fundamental principles. And what does that actually mean? Okay, so that means when we are doing a CPC type of question, we've got a few steps that we follow. We identify threats to fundamental principles. We evaluate the significance of the threat. Then we implement safeguards. Okay, so this is typically what we follow when it comes to CPC. So basically what this first required is doing is it's saying, okay, cool, do not identify threats, but do speak about the fundamental principles that are threatened or breached. Okay, so that's the first one. Then the second one is a little bit more interesting. Okay, so it says ethical considerations, and now there's an extra part to it. Whether or not Lebogang should advise Rainbow Tea to accept the assistance. And then the scoping comes in. Do not discuss any aspect of the SICA and URBA codes of professional conduct. Okay, so now we are scoped in a different way for the second required, because now it's saying do not discuss the CPC. So we can discuss everything else depending on the perspective, right? Depending on who Lebogang is. Okay, so that's always one of the questions that you want to ask yourself when it comes to an ethics type of question, is who is the person that we're looking at? So in the first one, it was the Vendi boys, how it's run by the Peddler brothers. Okay, and in the second one, it's Lebogang. Okay, so always look at who are you dealing with? And that's going to sort of inform which perspective you look at it from when you look at our ethical concerns over here. And I'm just drawing all over the place. Okay, my first time doing this. So which perspective we're looking at it from. Okay, and then be very careful of your scoping. Okay, cool. So that is ethical concerns. Let's try a different type of required. Okay, so now we're dealing with substantives. Ooh, okay, and I know everybody loves this. So when we are dealing with audit procedures, and now I'm using a different word, so let's sort of see where everything fits in, right? So we have this thing called audit procedures. And audit procedures includes test of control, and it includes substantive. Now, substantives includes our analytical procedures, and it includes our test of detail. So now you have to be very careful with the wording when it comes to substantives, right? So if we take a look at the first one, it says recommend substantive tests of detail. So now if you take a look, it's specifically scoping us to that aspect only. Okay, but let's read a little bit further. That the auditors should perform to obtain sufficient and appropriate audit evidence related to, and here's more scoping coming in, classification, rights, and accuracy evaluation and allocation. So now we've been scoped to specific assertions. Okay, so we always need to keep in mind, are they limiting us in terms of what assertions we need to design these substantives for? The following procedures have already been performed and should not be included in your recommendations. And this is where most people start to cry, because these are all the nice easy marks. Relevant schedules, casting and cross-casting, management representation letter, agreeing totals to GL and trial balance, stratifying, selecting a sample, auditing notes, scanning for and following up on abnormal or unusual items. Okay, and then there's this little thing right at the bottom. Consider VAT. Okay. So now you need to do substantive procedures, not only over the agricultural drones, okay, but also over that. Okay, so you've essentially got two things. And with a 33 mark allocation, you can understand why. Okay, so when it comes to substantive procedures, another mistake that I see people make is they almost limit themselves. So if you look at the wording of this required, it says agricultural drones. Okay, so now obviously you don't have the context of the scenario, but drones, it can either be inventory, or it can be PPE. So let's assume it's PPE. So if they're saying just do substantive procedures over the drones, it's saying do substantive procedures over this item in PPE. So keep in mind what we look at when it comes to accounting for PPE, right? So we'll have our opening balance, we'll have additions, we'll have disposals, depreciation, impairment, and we'll have our closing balance. But now you need to keep in mind that these drones are part of the additions, right? So we can't do anything over the opening balance of PPE as a whole because the drones are only an addition to PPE. We can't do anything over the closing balance of PPE, can't do anything over the disposal. However, additions, there will be depreciation on this addition. There might even be impairment on this addition. So now we've got a whole host of things that we can talk about. So we can talk about the initial cost, then we can do procedures for depreciation and for impairment. If the question just said perform substantive tests of detail over the purchase of the drones, different story. Then we can only look at this element if they just asked us for the purchase of the drones. So I'm hoping you're seeing the difference here. Okay, so let's contrast that to the next question. So the next required says, describe the additional substantive audit procedures. Now we see, okay, oh, cool. So additional substantive audit procedures means that I can talk about analytical procedures and I can talk about tests of detail. Wonderful. So now it opens up my basket of answers, if you will. Okay, so that they should perform relating to the accuracy, occurrence, and completeness of the debtor's age analysis. And again, they give us a bunch of procedures that have already been done. And if these procedures have already been done, it means it's out of scope. So if you write anything to do with those procedures, you're not going to get any marks. Okay, so this thing of scoping, and in a substantive procedures type of question, your scoping can be procedures already done, which means do not include those. It can be assertions, it can be related to a specific line item or a specific journal entry relating to that line item. So purchase of drones versus drones, completely different procedures that you need to include, okay? Drones, much more far-reaching. Purchase of drones, much more limiting. Okay, let's take a look at another one. So now we've got ROM. Ooh, everybody's favorite. So let's just think about what we're dealing with here. Let's use a different color. Okay, so we have this thing called audit risk, right? And audit risk is the risk that the auditor expresses the wrong opinion. Okay, that's like the worst thing that could happen for an auditor. We give the wrong opinion. And this is influenced by two other types of risk. Okay, ROM. ROM is essentially how management can create misstatements in the financial statements. Okay, and we can speak about inherent risk that's due to the nature of the business, or we can speak about control risk. And then ROM can further be split into assertion level and overall financial statement level. Okay, oh, one more thing. Let's just quickly go back to substantive procedures. So another thing that people often get wrong that I want you to be cautious of is the wording of a substantive procedure. Okay, so a substantive procedure, the way that we teach it at IAS is to do something to something for a purpose. And guys, it pains me, breaks my heart when I have to mark papers where I can see people know what they're doing, but they haven't used an audit verb. So that's what your do something relates to. Okay, and those audit verbs come from ISA 500, right? So it is your inspect, your inquire, but inquire always has to go with something else because it's not strong enough on its own. We have our reperform, we have our recalculate, and we have our observe. So you have to use one of these audit verbs. okay, to something. This is now obviously looking at a document or a physical thing, because you can physically inspect PPE items, okay, and then for a purpose. What assertion are you trying to get comfort over? So here we want to link it to our assertion. So if we recalculate depreciation, we are recalculating an amount. We want to make sure the amount is correct, which means the amount will be accurate. Okay, so recalculate the depreciation using the useful life and apportion it for portion of the year to ensure that it was accurately calculated. There we go. We've linked it to the assertion. So you'll want to link it to one of the assertions that they have scoped you to. Yeah, so classification, rights, accuracy, valuation, and allocation. You cannot just write all of them and hope you're going to get it right, because the marker is going to look at whether you know that that procedure speaks to that specific assertion. Okay, so important for wording there. Back to risk. Okay, so we have ROM. ROM is what management can do to create these misstatements. Okay, it's either due to fraud or error. So how can they perpetuate fraud? How could they make errors in the financial statements? Okay, how could their controls let them down? That sort of thing. Okay, and then we have detection risk. And detection risk is exactly what it sounds like. It's the risk that the auditor is not going to detect these misstatements. So management makes the misstatements, the auditor has to detect them, okay? Hence detection risk. Okay, so we obviously cannot control ROM. As the auditor, we cannot control ROM, but we can control detection risk. So we use detection risk. We reduce detection risk to bring our audit risk down to an acceptably low level. Okay, so that we don't express the wrong opinion. Okay, cool. So that is audit risk. Let's see what they want us to do. So they have said here, describe the risks of material misstatement. Okay, so we're dealing with ROM at an overall financial statement level that they should consider during the planning of its audit. For each risk identified, state an appropriate audit response to address the risk. Okay, cool. So response is going to go back to your audit procedures. Are we going to do test of detail? Are we going to do analytical? Are we going to do test of control? Okay, but we're going to focus on I, which is risk of material misstatement at overall financial statement level. So what does the wording for that look like? So if we are dealing with a risk at overall financial statement level, it means that the risk is pervasive. So essentially the risk is so big that it affects multiple line items and essentially the financial statements as a whole. So you need to have a trigger. Your trigger is going to come from your scenario, and the effect has to be, how does this affect the financial statements as a whole? How does this trigger create a risk for the financial statements as a whole? Okay, cool. Let's look at the next one. So we contrast that to required B, which says, discuss the risk of material misstatement related to the inventory account balance in the 2019 financial statements with reference to working paper 1021, okay, excluding attachment 1. Okay, so they're talking to us about inventory account. So now, because they are limiting us to a specific line item, we are now dealing with an assertion level risk. Okay, so assertion level risk affects maximum 2 accounts or 2 line items, because double entry system of accounting, right? Every debit needs a credit, so that's why maximum 2. As soon as it affects more than 2, then we move into overall financial statement level territory. So with assertion level, it's very similar wording. We need a trigger, and your trigger is going to come from a scenario. Okay, and your effect looks a little bit different, because now it's linking to the line item, how it creates a risk in the line item. And it's got this extra little piece, which is the assertion. So you have to tell me what assertion is affected by this trigger? Is it accuracy? Is it completeness? Is it occurrence? Is it cutoff? Okay, so you need to understand your assertions. Maybe I'll do a separate video on assertions. Okay, cool. So I get so heartbroken. And I know this happened in tests that the IAS students just wrote. I get so heartbroken when I see people writing beautifully worded risks, but it's an assertion level risk and they haven't included an assertion. So how many times have you written down beautifully worded risks, you get no marks, you get your marks back and you're like, why did I get 0 for this? It's probably because you didn't link to an assertion. Okay, so this assertion over here is non-negotiable. That's why it's called assertion level. It makes sense logically. Okay, so that is risk. And then I think I've just got one more thing to contrast it with. Yes, okay. Well, not risks, but we got one more thing to dissect. What does the required want from me? Okay. Oh, with risk, one more thing. So the last thing is describe the business risks faced by DNA. So a lot of people get confused between ROM and business risks. So remember that ROM is specifically for the auditor, whereas a business risk is for management. So it's two completely separate perspectives, right? So ROM, the auditor, is looking for where there are possible instances of misstatements on the financial statements. It has to be linked to the financial statements. Okay, whereas a business risk, this is more for management of a company. And they are essentially looking for issues that are going to affect their finances and their operations. So the wording of this looks slightly different, right? So something like JSE listed. This can be a business risk and it can be a ROM, but the wording of it is going to look slightly different. Because for a ROM, you're going to say, well, management may have an incentive to commit fraud in the financial statements in order to maintain their listing status. Whereas for a business risk, it's they may not comply with all of the regulatory requirements of the JSE and be subject to fines. Completely different perspectives, okay? The one is affecting their operations, the other is affecting their financial statements and how the financial statements could be misstated. Okay, the last little item we're going to look at for auditing, because I'm trying to keep these short and sweet, even though I think we've already gone quite over the short and sweet part. So we're going to contrast controls and test of controls. Okay. So this required says, describe additional controls that should be implemented to prevent or detect the risks of material misstatement in the existence and completeness of cash and cash equivalents balance. So if you take a look, you will have a system description. So a system description, back in my day, when I did PGDA, we did not get the required. We had reading time, we had to look through the scenario, try and find the triggers, and then only after 30 minutes did we get our required. So during that reading time, if you saw a system description, you knew that one of 3 things was coming. You either were going to have to do a ROM type of question, or you were going to have to do tests of controls, or you were going to have to recommend controls. Spelling is terrible. Okay, so when you saw a system description back in the day, before you got the required, you knew it was going to be one of these 3 things most likely. Okay, so in a system description where you are describing additional controls, you are essentially looking for what is missing. Okay, so you're looking for what is missing or what is wrong that is essentially going to cause issues with our, what did they say, existence and completeness. So you will read through this system description and you will look for things that look like they're missing or they're wrong. Okay. So for example, I'm just spotting something random. The total amount payable, including VAT, since they are a VAT vendor, is calculated after all the items have been scanned. The cashier selects a payment option on the cash register based on the customer's payment preference. Okay, so you would expect this to be an application control. Okay, and you would expect the VAT that's programmed in that system to be 15%, right? So those are controls. So because it's not explicitly stated in the system, you are going to say, well, this is a control I would expect to see there. Let's contrast that to a test of control. So now you're dealing with a test of control. You are now the auditor coming along to test controls that are actually there. Okay, so do you see the difference? Recommending controls, things are missing or they're wrong. Whereas with a test of control, you need to test what is there. Okay, so I always describe it like this. Management is sus. I'm trying to use Gen Z lingo here. Management is sus. So we don't really believe when they tell us they do certain things. So they will give us a system description like this, and they will say, yeah, this is what we do with this particular business process. And as the auditor, when we're doing test of controls, we go, is it? Do you actually do that? Let me see. Let me try and do this control. Or let me look at evidence that this control has been done to see if you do actually do this. Okay, so as an example, they speak about the system calculates the cost of the repair. Okay, so what we could do is we could use dummy information, like a dummy repair, put it into the system and see if it calculates the cost accurately. Okay, because that's essentially what they're doing. They're putting information into the system and it's doing a calculation. So we want to mimic that because that's going to tell us that the control is working. So different to a test of detail, but the wording is still the same. Okay, so wording for test of control is still do something to something for a purpose. The wording for recommending a control, however, is what is the control that you are suggesting? And the thing that students always forget is why. Why are you suggesting this? So you can either explain the risk that it addresses, or you can link it to, in this case, the assertion or the control objective. Okay, so that is a little lesson in breaking down the required. I hope that this was useful. I'm going to be doing this for the different subjects as well, so stay tuned and thanks for watching.